Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, April 5th edition of Benzinga's PreMarket Prep. I'm Spencer Israel. Joel is out sick today, but Dennis Dick is with me as well, and we have a jam-packed show for you. 3 guests on the docket today. First up will be at 8:15, Paul Henneman will be joining us. He is the president of Value Engine. He's going to talk about which stocks were winners and losers in the Value Engine capital management portfolio in the first quarter. At 8:35, we're going to be joined by Hema Reddy. She's an author and financial analyst. And then at 8:50, we're going to have Adam Feuerstein on, the senior columnist at TheStreet.com. If you saw his Twitter rant yesterday on some small-cap biotech stocks, CYCC in particular, he's going to go a little bit more in-depth about that. But before we get to those guests, we've got to cover the news of the day that includes the largest M&A deal in U.S. restaurant history, Panera. We have a lot of ratings to discuss. Amazon getting the rights to the NFL broadcasting and taking it away from Twitter after 1 year, and we have another deal with Amazon and Plug as well. Dennis, how's it going today? You fighting off a cold?
Yeah, I'm sick too here. So everybody's sick, but we're going to do the show for you here anyway, so please forgive my nasally voice here as I'm all stuffed up. But we got a show here for you, and like you were saying, lots of other stuff. Action overall market is kind of quiet. We're just hanging out just up a little bit here this morning. Oil trading up slightly as well. Gold trading slightly down. But like you said, there's some big individual stock news here this morning. We might as well start with the deal of the day, Panera Bread, Spencer. This was rumored 2 days ago and obviously comes to fruition here this morning.
Rumored 2 days ago and then reported again last night by Bloomberg that they're in talks to sell itself to Jab Holdings. Jab, of course, the same company that bought out Krispy Kreme a few months ago. That deal was confirmed this morning, $315 a share in cash. Interestingly enough, actually, when that was announced, that was about 2 hours ago from the time we're recording this, Panera shares are trading about 3.5% below the acquisition price.
Yeah, so you get a little bit of a discount there. $3.15, the takeout price, $3.50. So obviously we've had the big run up just in case, that's, just risk ours basically pricing in just in case the deal falls apart. They're pricing a 3.5 point discount on it, but I don't see any issues here. I think this deal's probably going to go through. They've been buying up a lot of companies, that Jab. I was just looking, Keurig, Krispy Kreme, like you said. They got a bunch, Caribou Coffee, Einstein. I'm just looking at their brands here. Cody. They've got a lot of brands going on there. They're quietly buying up a lot of companies.
Buying up half the food space. And I did see S&P Global tweeted that it was the largest value deal in U.S. restaurant history.
Shareholders in Panera Bread have been rewarded forever. This stock has just been a monster since back in 2010. You can go, it was $58 stock, and it's just been the slow, steady climber. Never really had a significant pullback, and then in the recent couple of months, this thing has just blasted off. We were $210 back at the beginning of February, and obviously the takeout price $315. So 50%, it's up 50% in the last 2 months. So Panera Bulls well rewarded here for their patience. Stock is obviously going off the board now. And Spencer?
I'm sorry, I muted myself. I did the Joel
trick.
I muted myself.
Look at this. Joel. We blame Joel for that even though he's not here.
I was on mute. I was asking, this is an all-time high?
On Panera Bread? Oh, yeah. It was an all-time high 2 days ago when the rumors started 292. And, sometimes buying on rumor works. And obviously in this case it does. It's when those rumors don't materialize, like we were saying yesterday on Kate Spade. Rumors obviously don't materialize there. When the rumors go on for a long period of time, that's when you start to get suspicious. 1 day, 2 days. This Panera Bread rumor broke 2 days ago and boom, it's done. This Kate Spade broke 3 months ago and it's still not done. And that's why investors start to get skeptical. Obviously, we talked about it yesterday. The coach bid, they were saying, I was seeing some analysts say that they think the coach bid might be in the low 20s. And that is why Kate Spade got hit so hard yesterday, because they're not going to get the premium that they thought they were going to get. But obviously Panera Bread shareholders rewarded. A couple other deals to talk about, though, too. You mentioned off the hop Amazon getting the NFL streaming contract from Twitter.
Yeah, after 1 year of of being on Twitter. The NFL has moved over to Amazon as their online streaming broadcast provider. Last year, Twitter paid $10 million to broadcast 10 games, 10 NFL games. Now Amazon is paying $50 million to
Wow.
stream 10 Thursday night games. So they beat out Twitter and Facebook for the rights to that, which is interesting.
And if we look here, I mean, Amazon has just quietly had an incredible 5-day run here. We were 850 a week ago. Now we're 910. So Amazon bulls. Now you start thinking 910. I mean, it's been a pretty impressive run, but on pullbacks here, it just seems like there's underneath demand, like we've talked about. Every time this thing pulls back, there's buyers. New all-time high here again this morning on the NFL deal. Can this be $1,000 eventually? Possibly. I think it could be. I probably, it doesn't fit my whole value criterion. But again, we got to talk Amazon a little bit differently because Amazon puts so much money of their money back into the company for investment. They're not afraid to spend money there. And, we've had Michael Proctor on here before, and he said, if Amazon was to just start, not putting so much back in their own company and actually starting to, worry about the bottom line, that they could make a lot more money than they currently do. But they're worried about just growing the company here right now. So, so obviously, and it's continued to grow as they continue to do other things. Unbelievable company, an unbelievable stock. $910 here this morning, and I don't know. I think eventually you might see $1,000 on this.
And Yayo with a good point there. You have to be an Amazon Prime member to access the games, which of course means paying Amazon money. So good job there on Amazon. Also another deal involving Amazon this morning. PLUG. Plug Power, they granted Amazon warrants to acquire 55 million shares of Plug stock at about $1.2 a share. Comes out to about $75 million.
Yep. Amazon's smart, eh? Because you come out here and then obviously this Plug Power is going to pop big time when this news comes out that you've got warrants on them now. And obviously the big pop here this morning, it's up 87%. If I look at my leaderboard, I believe it is actually number one. I'm just going to my leaderboard right now. Yes, Plug Power is the leader, 86%. INNL is another one which is rumored to be getting taken over too. It's up 40%. But here you are, an immediate gratification for Amazon there. Their warrants are worth a lot of money now today. Stock trading up, 2.3 million shares have traded. Stock trading up to $2.40. This is a stock that has been in a world of hurt. Obviously, with Amazon coming in here now, maybe people start to get interested. Stock had a huge run back in 2014 when it ran from 54 cents up to over $11. I believe it was the Citron tweet that took it down from those heights. If you remember, Spencer, I think we were covering that on the show.
I remember that.
And stock came back down to earth. I think Citron was saying the stock they thought had a fair value of about 50 cents and almost got back down to those levels there. I'm not sure if Citron covered. They probably did, but it was trading under a buck just as early as this year. Let's talk sympathy plays here too, because Plug Power, there's two stocks that I often did trade with these. I used to actually do some different pair trades. Ballard Power, BLDP, is one that people look at that trade a little bit in sympathy with Plug Power, and also Fuel Cell, which is FCEL. Both of those stocks are getting bid up here this morning as well on the Amazon deal with Plug. BLDP trading up about 7% in the pre-market. Fuel Cell, FCEL, trading up 16% here in the pre-market. So both of those stocks popping this morning on the Plug deal.
Yep, great job there, Dennis, with the sympathy plays. I was going to ask you about that. Let's actually stick it with the M&A for a second, because we had a couple other things I wanted to discuss from yesterday. Rent-A-Center, this is RCII. Was higher following a tweet from a reporter at The Street who said Aaron's looking to AAN is the ticker there, looking to acquire that. We had of course, the Jad Panera deal we already discussed. There was a couple others. The
INNL. I saw rumors on Reuters, I believe, for this one. I don't know if that's been officially announced here, but there was rumors that they were going to get acquired too. I don't remember who the suitor was. Goldfish memory for me, but I saw it go by last night. Stock is trading up 46% here in the pre-market, so maybe we want to do a little digging there. We'll find out, if there is there an actual deal or still just rumors here.
Yeah, the rumor is that Gwinnett Point is nearing a deal to acquire them.
Okay, and Innocal INNL, it was popping on this yesterday, so obviously maybe somebody got the memo. $1.26 up to $1.82. Then after hours, the rumors come out there. Stock trading up another 47% here. So we got a few deals here this morning. Smaller deals, but some deals.
Yeah, and the final rumor from yesterday is that MSG Networks, ticker MSG, is set to be up for sale. Verizon is a potential suitor, as is AT&T. So it's pretty much...
Also, I saw go by my timeline, Taser is supposed to announce some special announcement here this morning. from the CEO? Did you
Special
see that go
announcement
by
from
on your
Taser.
timeline?
I did not, but I will.
Taser's supposed to. I saw it go by on my timeline there. That CEO is going to do a special announcement here this morning. I'm not sure if that has happened here yet, but if I look in the pre-market, Taser is trading up here this morning. It's up 62 cents or 3%. It actually made a new low on the move yesterday, so we'll have to see what the CEO has to say.
So someone knows what this news is.
They're popping it ahead of it, so
All
obviously
right.
somebody thinks it's good news. I mean, would the CEO come out and say bad news when they say we're going to have a special announcement tomorrow? I don't know. I don't think it would be bad news.
That's a
Maybe.
good point. That's a good point. Uh, moving on, we had one earnings stock to look at this morning. That is the Walgreens Boots Alliance (WBA). Where is my earnings number? There we go. They reported Q2 adjusted EPS of $1.36. That's in line with the estimated sales of $29.4 billion versus $30.24 billion. So they missed the sales number by about $1 billion. They also reaffirmed their fiscal year adjusted EPS outlook, and that is all I have to say about that.
Getting hit a little bit here this morning, but not that significantly. I'm just looking 81.50 here is where it's last traded. $80. I mean, if you look here, that's the level we got down to multiple times in February. It's a big psychological level. Gets down there the first time, I think, it might have a bounce. So I'd keep an eye on the 80 level in WBA. Not sure if you're going to get a chance or not. It's still $1.50 above there. Also, Monsanto reported here too, Spencer, MON, and it is trading up. Again, Monsanto earnings aren't as important as, any talk because there's still the potential merger on the table. It's with Bayer, right? The Monsanto?
Yep,
Yeah, so the
Monsanto.
the merger's still on the table here, but Monsanto did report. Do you have the earnings report?
Yep. Q2 EPS from continuing operations up $3.19 versus $2.79 estimate, so they beat that number. Sales of $5.074 billion versus $4.73 billion, so they beat that number as well. So they beat on the EPS, they beat on the sales.
Stock is trading up $1.50 in the pre-market. It also went ex-dividends, so it closed at 114.75. Adjusted close is 114.21 because it paid a 54-cent dividend. And it's trading up here at 115.88 this morning, so that's why it's up $1.50 and not just $1. MON here, if I'm just looking at it from a technical perspective, you had a high at 116.04 back on March the 1st. But again, earnings reports don't matter as much to this stock as would be any commentary with the Bayer merger. Obviously, that's still on the table. I believe the takeout price for that is up at 128, if I remember correctly.
I was actually I don't remember either. I was just looking. I think
it's 128.
I think it was $66 billion. So you
Yeah,
can work your way back from there. But
it's come back. It's come up a long ways. I mean, it was trading down the 90s after this, $99, and obviously, 115 now. Some people may think this is, this deal's going to get done, or they think the company's just, in a little better shape than it was maybe if it has to go on its own.
Yep, definitely. I'm looking for. Yeah, I think you're right with that number. Any other? I don't want to get to. Oh, you know what? Let's cover one rating if we can
Sure.
before our first guest.
Sarepta?
We had a lot. Sure. Sarepta getting the upgrade today from SunTrust.
$45 price target on it. So upgrade to buy. SunTrust stock is trading up $1.30 here in the pre-market. It's had a struggle, and I was in this for a while. I played it long once. I got the nice pop on it, and I sold part of my stock, and then I scratched the other part. I wish I would have sold it all on the pop here, and I like it down here. It's still been a lot of support down here at $28, so maybe SunTrust is looking at that. Seems like every time it gets down the 28, 27 area, it seems to have a run. My only concern is it's been down here a few times, so it's got to get up, and it needs to start holding the 30. I want to see what it does on this analyst upgrade here today. I want to see some follow through, because if it's one of those days where it gives back all the gains, that is concerning. But it's had trouble getting off the mat, and Sarepta has had a couple analysts before, with some positive commentary that kickstarts it, and then it seems to drift back down. So we'll see what happens here with SunTrust this morning. Giving a vote of confidence, $45 price target with the buy. It's trading up over 30 here this morning, but I don't know if I'm chasing this one.
All right, we got a break for our first guest right now. That's Paul Henneman, the president of Value Engine. They're going to tell us which stocks were winners and which were losers for them in their Q1 in their Value Engine capital management portfolio. So we'll be right back with Paul. Welcome back, traders and investors, to Benzinga's pre-market prep. I'm Spencer Israel here with no Joel today, but Dennis Dick, and we're on the line now with Paul Henneman, the president of Value Engine Research. Paul, how's it going today?
It's going well. Thank you for having me.
So, for our guest, you were on the show last year, but for our guests who aren't familiar, give us a quick primer of what exactly Value Engine does.
Sure. So Value Engine is a quantitative research provider. We run some very sophisticated computer models on over 5,000 equities every day. We compute a fair market valuation, and then we have forecasted target prices that range between 1 month and 3 years out into the future. And then we kind of sum all that up into a strong buy, hold, sell, strong sell recommendation for each stock. And everything is updated every day.
And then you're running the Value Engine capital management portfolio for clients. What were some winners for you last month?
Yeah, so Value Engine is purely research and it's been around for 17 years. And then we now manage money using the Value Engine research with Value Engine Capital. So the research flows into Value Engine Capital. We have 5 different strategies. Some of the newer strategies, which actually have worked particularly well this first quarter, are our small cap strategy and our REIT strategy. We didn't talk about those last time, so I thought I'd bring those two up this time. So, for example, in our small cap strategy, we had a couple of big winners. Ticker ANW, Aging Marine was up 19.5% for us just over the last month. The portfolios trade monthly, so they're roughly calendar month plus or minus a day or two returns that I'm going to give you here for the most recent ones. TYTK was up 21.2%. NMM was up 18.9%. And RYI was up 16.1%. Those were our best ones. We had a few more positive stocks and, of course, the negative ones. We like to be honest here at Value Engine. So some of the losers we had was ticker symbol I was down 16%. CLD was down 8.2%, our 2 biggest losers.
Paul, talk about your process. How does Value Engine, find these stocks?
Yep. So for the portfolios, we Value Engine runs screens through our 5,000 stock database. We cover 4,000 U.S. plus an additional 1,000 Canadian stocks. These are U.S. portfolios, so they're pulling from the 4,000 stock universe. For the small cap strategy, we have limits on for example, 1 billion for maximum market cap. So these are very small cap stocks. We do look for a minimum amount of trading volume and a certain stock price in order to be able to trade it to make sure the stocks are liquid for us. And then we run the screen every month, and a certain number of stocks will fall out of favor. We're basically looking for the top ranked according to the Value Engine metrics, the Value Engine forecasted returns for the month with these market cap criteria for the small cap strategy. We do the same thing for our REIT strategy, which is all real estate investment trusts. So that's the same thing. We're screening through all 4,000 stocks. We're limiting the universe to just REITs. And then we're running the Value Engine models, and we're taking the best of that universe and then trading it monthly for the REIT strategy as well.
We have a lot of listeners that like REITs. What do you look for? Can you give us any types of details and specifics, what you look for in the REITs to rank them?
Yeah, not really. We don't. So we're really relying on the Value Engine metrics, and we're not looking for any particular subcategory of REITs.
Okay.
So, for example, all of the REITs that we're currently holding are just designated for the industry as REIT Equity Trust Other. They all fit within. There's only one that's a REIT Equity Trust Residential. All the others are just designated as Other. And some of the ones that we did really well this past month on, we had a DRH was up 3.7%. GLPI was up 6.3%. INN was up 3.8%. Then we only had 2 or 3 losers. We had PKY was down 4.7%. AHT was down 1.2%, and FSP was down 2%. And each of these stocks, by the way, are 15 stock portfolios. We divide the markets up into 16 sector groups, and both portfolios are sector diverse. So we're pulling one stock from each sector group, and then we're kicking out the worst one that the models like the least. So we end up with 16 stocks, kick out the worst one. That's usually done by the portfolio manager, and then we end up with a 15-stock portfolio.
Question from our
go
chat
ahead,
here,
Spencer.
Paul. Question from our chat. What is your top holding REIT?
Well, let's see. Our top holding REIT. So we're holding right now, so I don't have returns on them. Let's see. I would say some of the ones that we like are ticker symbol RLJ, RLJ Lodging. We have a strong one-year forecast target price of 10.33% on that, which is fairly good for a REIT. For the small cap portfolio, that would be low. We look at one-year forecast target prices range between 15 and 40% for the small cap. But the REIT strategy is a little bit different of an animal here. So another ticker symbol would be FPO, First Potomac, one-year forecast target price 10%. And these are without the dividends that these pay as well. So the REITs, of course, are nice because they pay dividends. The ticker symbol GOV, one-year target price of 11.33%. That's one of our best in here. And then LHO is a one-year forecast of 10%. So those are the stocks that we have a two-digit forecast target price for in our current holdings.
Paul, just looking at your sector analysis here, so, jumping into the value engine, you have most of your sectors are overvalued, but one sector that you say is undervalued is oil and energy. Why do you think oil and energy undervalued? And then secondly, is there any specific stocks that you guys are eyeing in that sector?
Yep. And so this is updated every day. And so the oil and energy, when we had talked just the other day, was our least or our most undervalued stock. And that has changed just in the 48 hours since we last talked. This is characteristic for Value Engine. Things can change just on a daily basis. So currently, oils and energy has fallen back to our fourth least overvalued stock, and it did go from undervalued to overvalued. And now we're looking only at medical, only the medical sector out of the 16 sector groups as undervalued.
Wow.
So oils and energy we now show on average at 4.26% overvalued, medical now at 1.38% undervalued.
What medical stocks? Is there any specifics?
Yeah, let me take a look here. So when I go to the medical sector group, we then subdivide those into all the sector groups are subdivided into about 140 industry groups, and the most medical services in particular, that grouping of stocks is the most undervalued. And if I go in there, let me see if I can pull out a couple of ticker symbols here. We like ticker AMRI. We show it as 30% undervalued. We have a buy rating on it. ESRX, showing it 16.7% undervalued with a buy. AIRM, let's see, 4%. It's overvalued, but we have a buy on it, so we think it's still going to go up in price. Another one that's overvalued but has strong momentum and price reversal data, so we still have a buy on it, is TVTY. So the last two we would consider as a little bit more risky, but we do still have, but the models still like them for forward stock price movement. But we do show them as overvalued in the long run.
And Paul, for our listeners who want to learn more and want access to your research, how can they get that?
A couple ways. They can go to valueengine.com, always spelled with a single E in the middle, VALUENGINE.com. We have a full 2-week trial. People can sign up, use it to their heart's content, unlimited for 2 weeks, and then they can just keep on with the subscription after that if they want to. It's inexpensive for the individual investor. I think we're around $15 a month for a subscription. And then Value Engine Capital Management, they'll see links on there, or they can go to valueenginecapital.com, and that's if they would like to trade these portfolios, sort of auto trade for them, and have us serve as their financial advisor and trade these portfolios using the Value Engine research.
All right, we've been on the line with the president of Value Engine, Paul Henneman. Paul, thanks so much for hopping on today. We will talk to you again soon.
Always my pleasure. Thank you for having me.
All right. Always a pleasure to talk to Paul. Love how he's...
Spencer, ADP data we had right when, at 8:15 there, and holy cow, we're getting a big pop here on some of the financials, I tell you, this morning. They're liking that ADP number because JP Morgan trade...
Yeah,
do we have the...
Yeah, I was
give the number.
I was going to give the number for March ADP employment change, 263,000 versus 187,000 estimate. Wow, the prior was 298. So prior lower, but way, way, way higher than the estimate. Give me some tickers.
Banks are blasting off on this. So Bank of America was trading flat on that ADP right before that ADP number came out, 23.45. It's now up 1.5%, trading at 23.75. Goldman has rallied over 2 points in the last 20 minutes or last 10 minutes since we got that ADP number. Wells Fargo and Citi both got upgraded today, so they were already up a bit, but they are up more now, obviously, at JP Morgan trading up as well. So most of your banks are up 1% to 2% here on that report. If I look at weakness, you see the TLT roll over a little bit here. XLU utilities are trading down, so some of your defensive names. Some of the REITs that we were just talking about might show a little bit of weakness on that number, but financials the immediate winner from the ADP report.
That's a big number. That They beat that one. They blew it out of the water.
Blew it away, and that's a big pop for the financials as well. So, and the market's liking it too, because S&P futures popped about 4 points just in the last 10 minutes there since that ADP report here too. So, financials looking like your source of strength here this morning, kind of opposite to where we were yesterday morning, where financials actually started the day a little bit weaker and then showed some strength towards the end of the day. Now they're starting the day stronger.
All right,
let's just do some levels on Bank America here. I'll just go on a couple individuals because these are going to be your movers. And one level I do want to point out on BAC is the $24 level, big hole psychological level. Two days he had the double top there, 23.98, 23.97. We're 20 cents away from there, but we got some momentum. I wouldn't be surprised if we challenge the 24. I wouldn't be surprised if that is a little bit of resistance once again there, because you're just getting right back up to that level. So that's the one level I'd keep my eye on in Bank America. JP Morgan, if I'm looking at that one, 88.30. The high of the recent move was 89.46. So as you get in the upper 89s, probably run to resistance there. Citi's kind of in the middle of its range. Goldman is kind of there too. So not as many levels just jumping out on the other ones, but I like that 24 level in BAC.
All right. I was gonna do my best Dawn impression, but that was much better than I could have done. Let's head back real quick to a couple of stocks from ratings land today, because there were a lot. Right, there were a lot. So we covered already Sarepta. You mentioned Citi and Wells Fargo going to upgrade this morning at Keefe and Briette. What about Amgen? Did we cover that? They got downgraded this morning at Jefferies.
You know what? This one starts to get interesting to me because Amgen obviously, had the big run up in February where everybody was chasing the stock, and chasing biotechs just has not worked for a number of years here because it seems like there's just overhead supply. If you were chasing Amgen again, you've been hurt here in February or in March because it had the gap down. I think it was after earnings. Now it's down here again, getting Jefferies downgrade. It's down a couple bucks. I like it in the mid 150s. I think you got some air below. 160 could be the first bounce level because there was a gap and you're getting into that gap area here now. So, that's one level I'd look at as the first is 160. But get to the 150s. This is one I've been eyeing for my investment portfolio for a while as a long-term investment. And I was thinking about pulling the trigger down at 150 before, and if it gets back down there, I probably will pull the trigger in my long-term investment portfolio. I still think long-term some of these biotechs are going to work themselves out, even though the sector just can't seem to get, started here. It does have a 2.83% dividend here as well, but get down to the mid-150s, I get interested in Amgen.
And I saw an interesting report this morning. Argus upgrading Win from hold to buy. They also announced a price target of $135 there on Win.
Just quietly here, the Win, and the other casino stocks as well, but really Win, it's been the one that's really taken off. So Win has been your winner in the casino land here. If we go out to the dailies and just take a look, we were at $100 just at the beginning of the month, then we dipped in it, and then obviously we've been on an incredible run here for the last 2 weeks, call it, up to 120. I mean, there's overhead supply. You had that one candle where we got up near that 120 level up to 119.80, and then we failed there. So, I think it gets back up there again. Maybe second time it fails as well. I'd watch, if I'm trading this today, from the long side, I'd watch that 120 level, call it 119.80 if you want to be precise. But, you go into the weeklies, you go into the monthlies. The weeklies is if you come back, you're getting into levels that we haven't seen since 2015. Go back to 2014, we're still a long ways from the all-time high and Win. It got up to $249 back in 2014. So we're still over 50% off those highs. But it's been an impressive move here for WYNN. Nice little 1.69% dividend on it as well.
Yeah, and you look at where it was in January of last year. It was $50. So, big run up since then. Other ratings that jumped out to me this morning. GNCR caught the downgrade.
GNRC.
I'm sorry, GNRC.
Your dyslexia kicking in.
Yeah. GNR. It's what's today? Thursday, Wednesday, Friday, whatever. GNCR, downgraded this morning at KeyBank.
So generic holdings, which is GNRC, trading down here about 2% in the pre-market. It's light volume, only 200 shares have traded here. But it is the downgrade. It's offered at $36.89. I think, you're probably 1% to 2% is usually what they knock down on these things. One concerning thing is that it's just been hanging out near the lows here for a while. The low of the move is $36.48. We might take that out today. Actually, it's offered now at $36.16. So, that is down over 2%. That would take out those lows if it does indeed trade down below that $36.43. I got to go to the weeklies, and it starts to open up really into the 34, 35 area here. So I see a lot of air below here if you cut through that 36.48 low, which we might do today.
Deutsche Bank came out this morning with a note on a lot of healthcare stocks. Let me see if I'm just going to kind of run through the list here because
Sure.
it was a big one. So, and they're pretty much split between buys and holds. So they announced at a buy, HCA Holdings, ticker is HCA, UHS also got a buy, THC got a buy, UNH, ACHC, WCG, CNC, and Cigna CI. Those are the buys in the Deutsche Bank note. And then a few holds to note as well: Quorum Health, QHC, LifePoint, LPNT, Molina Healthcare, MOH, Humana, HUM, Aetna, AET, and Anthem, ANTM, and Community Health, CYH. So pretty much half buys, half holds, but a big note this morning there from Deutsche Bank on the healthcare stocks.
Looking just at some of the big guns, healthcare providers there, because I like looking at the Humanas and the Aetnas, and I trade those every now and then. The sector just giving a little bit of feel overall. We've pulled back from the highs. UNH had a nice run up in February, and then March we kind of reversed and kind of did the opposite and gave back some of those gains, getting a buy rating on it here today. I don't know how much it's going to kickstart. One share, not 100 shares, one share has traded up at 116.61, but those aren't upgrades. These are initiations, are they not?
Yeah, correct. These are initiations.
Yeah, when you get the initiations, they're not quite as good as the upgrades or the downgrades there. They don't put as much, influence on it. When they're initiated at buy, I would say when it's one stock out of the blue, it's more influential than when they have a whole pile of stocks come out. So I don't expect, a lot of these stocks to get huge lifts on, these ones that have buys this morning. But, you have to be aware Deutsche Bank is, an influential analyst there. So there can be a little bit of follow through with some of these earnings or some of these ratings changes there. But UNH looking just kind of been hanging out here, 166. 166.5. I think it's got to get up above 166.5 before I start getting interested. Get above 166.5, then you start thinking about 170. Talking Humana, it's had a nice couple of day run here, just kind of hanging out here this morning. Hasn't had any trades. I'm just going to see the market, see if there's any bids or offers. There's really no markets. 208 to 224, really wide here. These are thinner though. The one thing I will say, if you're trading Humana or you're trading UNH, those are thinner stocks. So you've got to when you're trading the $200 stocks, a lot of times these trade with 50-cent spreads. Even off the open, sometimes they trade with $1 spread. So the slippage in these can sometimes be an issue. Sometimes it's nice to wait till the liquidity comes in before you just jump in, potentially at the open.
All right, it is 8:34. We're going to take our second break of the day. We're going to grab Hema Reddy. She's an author and financial analyst. Has a little. She's actually in our chat right now. Was talking about her morning letter, the skinny on the mini. We're going to talk all about her background and what stocks she likes in her systems right now. We'll be right back with Hema Reddy. All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. Today we're on the line with Hema Reddy. She's an author and financial analyst and sort of just by looking at her bio, sort of a jack of all trades when it comes to the markets. Hema, how's it going today?
Good, Dennis, Spencer. Thanks for having me. How are you?
We are doing well, doing well. So you met Joel at the New York Traders Expo a few weeks ago. Tell us about your background a little bit.
Sure. So I had a really early start with the markets. I was 16 when I saw my late father trading. He traded commodities, but he also traded E-mini futures and stocks. And I was like, this is so cool what you're doing. And how do I learn about this in college? He's like, you won't. but go ahead, study finance, and I'll teach you after you graduate. So I came back and started learning trading off the ES. He just said, I'm going to throw you in the lion's pit. And if you can manage this market, you probably manage anyone. And at the same time, I started learning technical analysis formally through the Market Technicians Association. I got my CMT, that's the Chartered Market Technician designation. It's basically a CFA for people who like to look at charts, not balance sheets. And here I am now, just 15 years or so later into my career. I got a chance to write a book about 5 years ago on the specific technical analysis that I learned about, which is GAN analysis. And then that led to educating through New York Institute of Finance and through colleges, and now officially through Wiley. I'm leading the development of all the CMT prep content for them. But I still keep the ES very close to my heart, and that's why I send out my newsletter every morning, the Skinny on the Mini. I'm looking to grow it past the E-Mini. I've got some requests for oil and some of the other index minis, but that's where it all started, was, seeing my dad in his trading room years and years ago.
Well, Hema, let's jump into the Skinny on the Mini. What's your morning notes say?
All right, so this morning it published actually a little bit before I came on the call, and I was pointing to yesterday, it actually worked out. I saw the low as it was forming, and I said, guys, I think this 2344.75 is going to be the low, based off of a method I use that I learned about from Jake Bernstein, actually, but that I Ganified, if you will. And that specific low at that specific time ended up being the low for the day. And I said, if this is the low for the day, we'll probably be choppy and rally, but not break the prior day's high. And that's what happened. So this morning, going off of that important low at 2344.75, I said, the bigger picture trend is still up. Yeah, things are slow and people are waiting to hear what the Fed says and all that. But 2363.25 is the next short-term resistance. If we get above the high for the week that was on Monday, 66.75, which I don't think will really clear strongly today, but if it happens, then for the day, I don't see us getting past 2378.75. I kind of go a day at a time, just like my traders do.
What are your thoughts here on just how relentless this market has been? Because you've been in the markets for a while here, and this bull in the E-mini, I mean, every time it seems to pull back a few percent, there seems to be just buyers there. Is this something? Like when you're looking at your charts, and do you jump back and look at the other time frames and analyze it, from that perspective, or are you just sticking more short term?
Sure. So I actually look every day at all, I would call them my 4 time frames. So monthly. So I start with the monthly, even for, just a front month contract, go down to the weekly, go down to the daily, and then I write my report about the 60-minute. And that's just because that I found to be the sweet spot for the ES between anybody looking to take a more of a swing position versus, a 5-minute chart trader. But I'll tell you this, during my time working at Piper Jaffray as a equity research analyst, and so I'm talking to people who run all kinds of crazy money. I mean, I kept hearing, when's the top? And this was 2014, late 2014 into 2015. And I said to my boss, I was like, what are people doing? I mean, there's no sign here that this is stopping, but it's just, I don't know, human nature, ego. I don't know what it is, but I don't see any reason why this market's topping out anytime soon. Could there be periods of volatility and chop, especially with, the unexpected election results and changes in the Fed and all that? Sure. But I definitely see the big picture buying there. And I will say at the expo, Jake Bernstein showed a very interesting chart that showed that institutions are still buying. I mean, and that just tells you right there. If they're still buying, then I would not be top picking anytime soon.
Well, it seems like institutions just, are underinvested is the problem. And every time they pull back a little bit, they're scrambling to get in. You see it even on some individual stocks here, too. And that's why I don't know either. I've tried to call the top a few times on this show in the last couple of years and unsuccessfully there. And I guess the trend is your friend, and I guess you keep going with it.
Yeah, that is true. And, it's all about getting that middle chunk of, if you look at the market of like this really distorted radio sine wave, I try to just tell people who are learning, listen, you're not trying to get in right at the low or get in right at the high. It feels good, and it's nice to be able to say you called it, but that doesn't make you money. What makes you money is getting in after the low is in place and it's shown itself to you, or after the top has come in. And that's what I try to guide people on with my daily report, and then with now and then I do kind of special reports on markets that I see moving.
Great point.
So Hema, talk about some of the other things that you trade. Besides E-mini futures, do you look at individual stocks, and which stocks jump out to you?
Sure. Well, just for the perspective of my traders, because I know they're very varied, I look at quite a few others, but I do look at the big stocks. I look at Apple simply because it's obviously such a heavy weight there out in the world and very much part of big ES moves. And so Apple's just been taking off like crazy, but I do have some GAN projections that I set out actually in the current content on my website. When you sign up for my newsletter and get access to educational videos, I made the video so recently that the projections I talk about for Apple in there are still relevant. So the next upside target for Apple is being surpassed now. It was 144.29, and that puts focus on 147.91 and $149.12. And that sounds very precise because it is precise and based off exact highs and lows going back a couple of years. I do also look at oil, again, because of the relationship with the S&P. And I was a little early on this. About 2 weeks ago, I was like, oil looks like it's going to make a low soon. And I marked the zone, but I was just a little too early in the timing. So if people put their stops down below 47.06, on the continuous CL contract, they were okay. But obviously, with the way it chopped around, it actually came and tested that low and now is taking off. So with oil, I see it getting back up to $50 to $5 pretty steadily before worrying about it slowing down again. But on oil, I actually have a timing point I calculated, and that's June 16th of this year. That goes along with a nat gas trade that I actually heard about at the expo, which was an unbelievable call by somebody who runs a statistics software. I mean, he's just not a chartist. He's not a value guy. It was really crazy that he saw it in that system and I saw it in the chart, and I posted it to my group, and I hope people took the trade because they literally would have gotten in right at the low and been sailing through. So those are just a couple of the big markets that everybody follows. I also look at the Dow now and then and comment on, the big broad picture where I see it. I think it's basically at a really strong support, 420. So 20,420, where it's probably going to head back higher, and 21,320 is the next. And I know I'm talking fast here, but I did see that you guys have a rewind option on your show here, so I hope people rewind and capture some of that, or they can email me and I'll send them over. But those are some of the bigger picture things I look at to help my traders who I know are looking at various other markets along with the ES.
And I was actually going to ask you, Hema, about which indices do you look at? Because we talk a lot on the show about S&P futures versus the index, and the Dow and the Nasdaq, and we don't really talk about those too much on the show. And Joel is definitely a futures guy. Do you have a preference as to which you personally track as it relates to the market, and which you prefer?
Sure, I would be the big S&P if I'm gonna, So here's how I look at it. If my mom, who I love but doesn't know anything about the markets, if she starts talking about the Dow, then that to me is just a reiteration of the fact that the general public thinks of the Dow as the market, but from a real what the financial market's doing and how policy and politics and everything are playing in, and what my clients, when I worked at an investment bank, are worried about, and what they have to beat in performance, it's all about the S&P. So that's the big one. And my market that I was introduced to by my dad, which is, the ES, is just 1/5 the size of that. So it's exactly the same in terms of big picture outlook.
Let's jump into a couple other individual stocks. You're following Google here, and Google is the stock that actually, of the big four horsemen that Cramer always talks about, we've got Amazon making new highs, we've got Facebook right there, not too far off the highs. Netflix has been right there, not too far off the highs, but Google's been kind of lagging a little bit. It's a little bit off the highs, not talking 20 points here. But what are your thoughts here on Google?
Sure. Taking a look at Google. Well, it's got back above. So I use moving averages not as like a trading signal. pairing, but definitely for refining trend analysis. And the fact that it climbed back over this 50-day exponential moving average that I have, it's a good sign from where it bounced a couple of days ago. I use the RSI in a really kind of funky way. Anybody who's heard of Andrew Cardwell or Connie Brown, they'll know what I'm talking about. But I don't look at RSI as overbought, oversold. I analyze it almost the way I do with price. So when I see the RSI now, and this is always a 14 period, okay? So in the case of a Google daily chart, I'm looking at a 14-day RSI. The fact that price made a higher low in on March 27th compared to the February 2nd low, but that the RSI made a lower low is actually a good thing for this market. So I think 900 is probably going to be seen within the next couple months here. I think it's going to be slow, but I think that's the next upside target.
All right, Hema, before we let you go, we got to find out how people can access more of your market thoughts.
Oh, for sure. So my appearance on your show worked out right after my site relaunch. So himaready.com, Hima, like Himalayas, Reddy, like Ready Ice, himaready.com. And you can find everything I do over there. Sign up for my newsletter, 30-day free trial, no obligation, access to the education. Follow me on StockTwits, Twitter, and also look at the calendar I have for any events I have coming up so you can get in on those.
Yep, and she's at Twitter at HemaReadyCMT is her handle. She's an author and financial analyst. Hema Ready, thanks so much for hopping on today. Loved the conversation. We will definitely have you on again soon. Have a good rest of your day.
Great. Thanks. You too, guys. Take care.
All right, 8:48 now. 2 more minutes before our final guest of the day, Adam Feuerstein of the Street. Dennis, can we get a quick imbalance update?
Let's take a look here. Caterpillar significant here. I'm just looking 38,000 to buy. They're all pretty small here. The banks we were talking before, a few of those have buy and balance. Bank of America actually has sell and balance, but I don't expect that to stay. It's obviously trading up significantly on that ADP report here. Jumping over Alibaba, 33,000 to buy. Twitter, 46,000 to sell. You wonder if they're going to hit Twitter on that news. They haven't hit it yet though, so I'm not sure how much they're going to hit that stock. I think if they were going to hit, they would have already done it. Just jumping in here, I don't see a lot of big ones though. They're really small today. Johnson & Johnson, 36,000 to sell. Verizon, 27,000 to buy. AT&T, 52,000 to sell. Again, I'd be cautious with some of the defensive stocks here if it's going to be a risk-on day, and if the bonds are trading down, sometimes stocks like AT&T and Verizon can actually get hit.
All right, 8:49 now. We're going to take our final break of the day. We're going to grab Adam Feuerstein of the Street. He's going to talk a little bit about some small caps in the biotech space. CYCC in particular, you may want to check out his Twitter rant yesterday about that one. And he's going to elaborate more about that. So in a moment, we'll be right back with Adam. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Dennis Dick, and we're on the line now with Adam Feuerstein, senior writer and columnist at TheStreet.com. Adam, how's it going today?
I'm doing well. How are you guys doing?
We are doing well, doing well. I want to ask you
Cool.
about CYCC. You have some strong thoughts there. You went on a bit of a run yesterday on Twitter.
Yeah, I guess I did, didn't I?
Yeah, I guess you did. Well, why don't you elaborate for us a little bit about why you think what you think?
I think part of it wasn't necessarily, cyclocell specific. I think, maybe it was more indicative of what I think I'm sort of seeing in the market this year. Seeing a lot of volatility and sort of a lot of kind of crazy momentum-based trading going on in some of these sort of down and out, small cap biotech stocks, low floaters that are really sort of from a fundamental perspective are just kind of like the kind of stocks you don't even think about anymore. They've sort of gone through years of failure. They've sort of been left on the side of the road, and then all of a sudden you see these kind of crazy movements in the stock, and you kind of wonder what's going on. And so cyclocell was just sort of the latest in a list of these things, of these stocks that have done this. And so I sort of chuckle because I've been covering cyclocell. God, I went back. I mean, this was part of the tweet storm yesterday. Was I sort of went back and looked at the stories that I wrote about cyclocell going back, 7-8 years. And it's just like this company is like one of the worst biotech companies out there that has done nothing. Really, the only thing they're successful at is raising money. They're certainly not successful at developing drugs, but yet, you see what the stock did, what's done sort of in the last week, which is, just kind of from my perspective is just sort of ridiculous.
Just to be clear, just to catch our viewers up on what exactly you said yesterday, you tweeted that CYCC is a zero, is what you said. You're trading worthless pieces of paper, and when the inevitable Rodman-led financing happens, you'll be a bag holder. Was the one that jumped out to me. So, what other stocks jump out to you as examples of what you're talking about right now?
I mean, we're kind of seeing this, Tonix Pharma. And that's a good example, TNXP, with a stock. I mean, again, a company with a really checkered past, not very successful at what they're supposed to be doing. And, at the end of March, they put out a press release saying that they were, I think the press release was about announcing that they were making a presentation at some micro-cap investor conference. And the stock just sort of went crazy. I think, the volume shot up to 30 million shares that day. So what did the company do? They went out and raised money on it. So you have this kind of stuff where, and I do realize, I get a lot of feedback, right? So I got a lot of pushback yesterday from traders who trade these stocks, and I understand that that trading is different from investing, but what I do worry about is that there are people who do this kind of stuff who don't. They don't necessarily, what happens when you get caught? If you're buying this thing and then, the company announces an offering, you're caught, the offering comes in at a discount, you're caught owning this thing much higher. So I think what I worry about, what I do see is that a lot of people sort of just kind of start making some sort of fundamental justifications for why these stocks deserve to be trading higher, when that's really not what's going on. So I think that's kind of the thing that I sort of warn people against is know what you're buying, because these sort of moves happen, and and these companies understand what's going on, and their investment bankers know what's going on, and they do try to take advantage of that by throwing out these sort of quickie stock offerings.
Okay, so how can regular people that you say are going to be left holding the bag, how can we identify these stocks as the run up is happening?
Well, I think again, a part of it is look at why they're running up. So we can go back to cyclocell, for example. The last couple of days, the press releases they put out have been just preclinical, press releases talking about preclinical, which means that they're talking about data that are in mice or they're in test tubes. They're not even in humans, right? So, the old joke is, we cure cancer in mice all the time, right? But obviously treating cancer in humans is a lot tougher. So those are the kind of things. Again, Tonix, the example of why did the stock run? Because they were presenting at some conference. That's so sort of look at why these things are doing what they do. And I don't want to necessarily, I can sort of sit here and sort of rag on companies that that have sort of bad track records. But I think it also happens in companies. It can happen in companies that personally that I like. I mean, a good example from recently is Aurinia Pharmaceuticals, which is a company that I actually like. I mean, I think they're doing a good job.
What's the ticker on
that?
But
the stock, the ticker is AUPH,
okay.
Aurinia, and this is a company that, again, I've written favorably about. I think they're doing a good job. The stock at the end of, it was sort of the middle of last month, middle of March. The stock just got a little bit overheated, right? So it was just running up, and I think it was like March 13th where the stock ran up intraday to like almost $11, and the company that night they went out and raised money, and so I quickly called some of my sources to sort of figure out where they were going to price the offering that night. And the stock, I think the stock had I don't forget where the stock closed that day, but it hit like $11, close to $11 high intraday. Well, I was hearing the pricing on that offering was going to be like $6.75. So a significant discount. So I tweeted that out. People freaked out. I mean, you should have seen my Twitter stream, right? People were like calling me every name in the book. But again, what happened there, right? Everyone sort of believed that, that $11 stock price was the real, quote unquote, real stock price when it wasn't. And the company was going to take advantage of that, and they were going to go out and they were going to raise money. And I don't blame them for doing that. But, what happens if you bought that, you're trading that stock around $10, $11, and then you see the next day, that they're selling a bunch of stock at $6.75.
All right, we actually have a question from Anthony Laverde, sort of our head of content guy here. Anthony, go ahead.
Hey, Adam, how's it going?
Hey, Anthony.
So I guess the question is, where does the SEC and the investment bankers' role fit into all this? A lot of these companies have products that will never see the light of day, and what role does the SEC and the investment bankers that do these deals, what responsibilities do they have, in your opinion?
Well, I think I would separate those two things out because I don't think there's anything necessarily illegal going on here. These are companies. Look, these are stocks. Most of these stocks are sort of, these companies sort of have low floats, so maybe they have high short interest. I mean, so whether you're long or short, there's a lot of volatility in those kinds of things. If you look at a lot of these stocks we're talking about, a lot of them have undergone reverse stock splits, which I think is kind of interesting. So a lot of this stuff sort of happens after that, which sort of exaggerates the effect. So you can sort of talk about, if there is sort of stock manipulation or, sort of that stuff, then that's obviously a realm of the SEC. I mean, from the investor banking standpoint, we joke. I mean, I went back to look at sort of how busy, let's say an investment bank like Rodman and Renshaw is right now. I mean, they sort of are the investment bankers to every sort of micro cap, crappy biotech company out there. They are raising money for these companies like crazy. I mean, they must be on 24-hour shifts over there, doing these deals. They cannot do these deals fast enough right now. And that's just, again, to me, that's just an indication, another sort of a barometer of, kind of the sort of momentum-based, sort of overheated market that we're seeing in a lot of these companies that from a fundamental standpoint, you sort of want to stay away from.
Adam, real quick, we got a question from our chat. Do you have any thoughts on EDIT?
Editas?
Yes.
CRISPR-based company. Company that I like. I mean, I think the whole CRISPR technology is really super interesting, but it's also very early, right? So they have not started human clinical trials of their first CRISPR-based product yet, therapy yet. So, it's one of those things where you're going to have to wait a while to see, real data. But, they're one of several companies that are developing, these CRISPR gene editing type therapies, which are, from a scientific standpoint, are super exciting.
Adam, Anthony again. Last question here. A lot of talk about who Gilead would decide to finally acquire.
We're going to go to this question again?
I'm going to that question on you. I know there's a good group of stocks out there that people talk about. You want to throw us an outlier that you think might be out there that Gilead would be interested in? Are you going to bite the bait?
Yes, all right. I will throw out one that I think that I don't know if people do discuss it. Maybe they do, maybe they don't. BioMarin, BMRN. orphan drug, the big orphan drug company.
Yep.
That's one that one I think that would be kind of interesting for Gilead to buy. Maybe not as talked about as much as some of the other names that you hear. You hear, Insight is always always thrown out there, or lately like Tesaro is thrown out there a lot. TSRO. Those are the ones that everybody talks about. But what about BioMarin?
Any particular reason why?
It's a little bit counterintuitive. They don't really overlap in terms of what they do. So I think in some ways that it doesn't make sense, but in another way it does make sense. That it would they would sort of be complementary to each other, and that so you're bringing in a whole other business, and it's also big enough. BioMarin is a big enough company to really move the needle at Gilead. Part of the problem here is that for Gilead is they're such a big company that they have to make acquisitions that can matter, sort of can move the needle for them, and it's difficult to find companies like that. So that would be one that I think would be interesting. Again, just a caution, that is pure speculation, guys, okay? So, I don't want to start seeing stuff like, Adam is predicting that Gilead will buy BioMarin. No, I'm not saying that, okay? I'm just sort of throwing that name out there along with all the other speculation into that big soup out there that we talk about every day. But it would be interesting.
You can blame me. I forced you to take the bait there.
I will blame you.
All right. Adam Feuerstein, he's a senior writer at TheStreet.com. He's maybe the most plugged-in writer on the biotech space. Adam, thanks so much for hopping on today. We will talk to you again soon.
Thanks for having me on, guys.
Thanks, Adam.
All right. That is our show for the day. Hope you enjoyed that. Hope you were watching the stocks he was mentioning, because he was moving them. He was moving BioMarin. He was moving EDIT. He was moving CYCC. They were popping on his comments. So I hope you were watching that. Hope you enjoyed that and our chats as well with Hema Reddy and Paul Henneman. And that's our show for the day. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. That's it for us today. We'll see you tomorrow. We'll have hopefully we'll have Joel back with us. Hopefully he's feeling better. And have a good rest of your day. And we'll see you folks on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.